Morning. When I'm cold, cold. Oh. G'day, mate. Nine o'clock on the dot. All right, welcome to the Forex.Today YouTube community. 14,000 foreign exchange traders around the world. Today we will cover dollar, yen, pound, euro. Maybe talk about the testimony today. Maybe talk about what's going on in the market in general. I'll answer your questions. Yeah, Dow's up 1,000 points pre-market. Makes sense to me. We can talk about that. Without further ado, let's go. Man, that's been floating around for decades, man. That's not what's going on. Anyways, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So it's funny. Men in Action says, stock futures rise after report Trump administration considering a $1 trillion infrastructure. Dude, that Obama had that same package, and I don't know, this goes back for the $1 trillion shovel-ready package. Yeah, that's not what's going on. Anyways, hi, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client to Traders Way. If not, please visit TradersWay.com, open up a demo. Even if you're just saying thank you for these webinars, you need to visit TradersWay.com, open up a demo account. In the back office, you can play some trades, download MT4 or MT5, all that kind of stuff, and you'll find out, this is pretty good. Yes, it's nice and it's lovely at Traders Way, so join the family. TradersWay.com. Feeling low today. I don't know why I'm low today. So I'm just like, I'm out. I need a vacation. All right, lots going on, anyways. All right, so what is going on? Look, the Fed yesterday said they'll buy bonds from corporates. So imagine every medium and large business, right? Ones that are large enough to issue bonds, they can just issue a bond to get money from the Fed, just like that. So you'll see things like, even though Apple Computers has like $1 trillion in the bank, they'll borrow money cheap from the Fed. Why? Because it's cheap money. It's just so anyway. So just imagine now every company in the S&P 500 can borrow money at will. It's it's like going to the bank and you're like, yeah, I need $1 billion. So they're like, okay. So very interesting, huh? So that kind of stuff is going to impact things. It may actually be a pretty interesting smokescreen because today and tomorrow, Chairman Powell has to do some of his chairmanship duties, and that is testify in front of Congress. Tell the U.S. government what the Fed is doing. So anyway, so that is interesting, right? It's interesting where this could just be a huge smokescreen where they can talk about that for 2 hours. And maybe never even buy a bond. But so anyways. But yeah, the central banks typically don't buy corporate bonds or junk bonds or bonds in general. So it's just another move forward by the Fed. And that props up the economy, which props up the stock market. So somebody said stock market's up 1,000 points or the Dow's up 1,000 points today. Of course it is. That's why. Not because of some shovel-ready thing Washington, D.C. wants to talk about. That's been talked about forever. Nobody cares. Okay? Now, the Fed coming in, pumping money directly into companies now. See, like, put it this way. When they bought treasuries, okay, let's talk about quantitative easing. I want to make sure we're all on the same clue train here. When the Fed did quantitative easing, they bought treasuries from a bond dealer. There's like 12 bond dealers in all of New York City, aka the world, right? So the New York Fed calls up JP Morgan and says, we want to buy treasuries, go get some treasuries for us and we'll buy them from you. So JP Morgan goes to the Treasury, buys treasuries, and then takes the treasuries they just bought from the Treasury and sell it to the Fed. Plus, they collect a spread on that because they brokered the deal. So the Fed doesn't buy it directly from the Treasury because that would just go to the government. Instead, what they do is they buy the bonds from JP Morgan. Now, the Fed gets the bonds and JP Morgan gets the cash, which goes in their bank account, which then 10% gets parked at the Fed and everything gets loaned out and gets to other banks. And some of that goes back to the Fed and everything else goes. And basically what it does, it starts with the bank and goes from bank to bank to bank to bank to bank to bank. And eventually the money you borrow to, I don't know, buy a car somehow came from the Fed. Right? So now what they're doing is different. They're not going to a bond dealer and buying treasuries. They're buying bonds from like Apple and IBM. And it's going directly into the economy and really floating into those companies. So I don't know how they're going to decide on sort of the moral hazard of which companies do they buy bonds from, because they're going to be giving them money. Now, of course, they're loaning them money, but, you know, the world is becoming more and more a winner-takes-all mentality. Okay? And what I think you're going to find is like let's say in the hedge fund world, there's 5,000 hedge funds, but the top 20 have 90% of the money. Right? So it's sort of like, who do they choose? And pretty soon, if you give all the money to Google and Apple, well, those are not good examples, but I don't know. Some companies out there are going to get money, and that's going to be an advantage, and perhaps even an unfair advantage to those that are not quite big enough. So what if your company needs money, but you're not quite big enough to issue a bond? Well, too bad for you, right? No money for you. So Blue Boy says, well, the company is actually using the money. They can do whatever they want. They're borrowing money. They're issuing a bond. So if you buy the bond, they can do whatever they want. But they have to pay you coupon payments, right? Right, so Men in Action says if it goes all to Microsoft, Apple, Google, Amazon, all these guys, well, that's really good. But those people still have their jobs, right? The thing is, will they lend it to Applebee's so they can keep waitresses employed? Maybe. Right? So back in 2008, there was a restaurant not far from my house. It was called Ruby Tuesdays. And it's kind of struggled a bit where it was going to be another burger joint, not like a nicer burger joint, but like an Applebee's. It was going to be like an Applebee's. And then they're like, well, Applebee's are kicking our ass being Applebee's. So they decided, well, we'll go a little upscale. We'll go a little more upscale. It's still fast service, but we're nicer than an Applebee's, right? So Ruby Tuesday they redid every single one of their restaurants. Meanwhile, they're not really making money, right? And then the financial crisis hit, and they had all their debt was way too expensive. They borrowed money at very high rates, and then for whatever reason couldn't restructure, and they went out of business in about 2009, I guess, pretty early in the days, because the markets were still frozen. And they couldn't roll over their debt, but nor could they pay their debt, and they went bankrupt. Not because the food was bad, but because their loans were structured poorly. This is kind of like, could the Fed buy a bond from a Ruby Tuesday type restaurant? Actually, they probably could. Yeah. So maybe Applebee's and TGI Fridays get it, right? I think I know who that is. I keep telling him after 10, bro. I don't think it's after 10. So anyways, the Fed's going to testify today, and at least they'll probably talk about that. And I just want you to understand the difference between the Fed buying treasuries from a bank, like a bond dealer is a bank. They're big banks, right? So the difference between the Fed buying treasuries from a bank versus the Fed buying bonds from a corporation. It's the one with Eminem. Lucky you, I think, or lucky me, lucky you. I gotta move. Give me the juice. So, anyways, here we are where we left off yesterday, and I outlined two things for you. So let me get rid of this, even though I just put it there. I outlined two things. Bulls were interested in buying this, very obviously. And bears had plan A and plan B if you're a bear. Okay? So, in a similar fashion here, right, you're watching no lower lows. Maybe here you're watching no higher highs. Okay? Okay? What do you think? Too simple? Okay? Notice that you should have known all of that last week. What's up, JP? Okay? Cool. So here's 15 minutes. What do you think? Is someone trading it? What's your next move, bro? Yeah. Like, imagine you were sitting here going, yeah, I think it's going to reverse. I think it's going to reverse. At what point do you recognize that it might be reversing? How long does it take? Okay. And do you guys remember I did like the 80-20 rule and I talked about bears selling rises up at the 00, right? And typically they sell around 95 and the stop goes around 20. You'll see it's pretty close. It's like 93. But anyways. So you'll notice that if you're using stochastics, it's overbought and now pointing down. And I know that because I'm calculating it with my mind. Bulls do buy bear candles, but they shouldn't do it at resistance. And bulls shouldn't buy bearish candles, they should buy red candles, and there's a difference. Okay, like down in here that we talked about yesterday, think about what the candles are telling you, right? Look at this. We were down here, up, 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 up. That was supposed to be straight. Let's try it again. Up, up, up. Down, down. That's where you buy. Up, 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 up. Down, down. That's where you buy. Up, 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 down. That's where you buy. Up, 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 down. That's where you buy. You understand? So you trade inside the wicks. Okay. So what's the opposite opposite of that? Well, we don't have, right? We're waiting for a down, 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 up, up, and then you sell. And then a down, 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 and then an up, up, then you sell. Then a down, 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 then an up, up, then you sell. Then a down, down, down. Okay? The most important thing is support and resistance because that is all part of price action. Right? And if price action is equal to support and resistance, I use two types of support and resistance. Okay? I use price, and the other one is market. Price action, market forces. Okay? This is market support. This is market resistance. We knew all of that. Okay, this is market resistance. This is market support. Okay, so it's just support and resistance. But clearly anyone that sold here is going to sell here, and we talked about it 24 hours ago. Okay, if you recall, this is the first level. Here's the second level. Okay, and it's very, very basic. So now you have to decide because you already know if you're a bull or a bear. So if you're a bull, this is pretty easy. And bulls think it's going to do this. Great, not a problem. Okay, you don't like the consolidation, but that everyone gets their turn. Okay, and right. So now a bear is trying to decide no higher high, no higher high, no higher high, no higher high, not even a wick. But we are getting, right, for the last two candles have produced lower lows, but not higher highs. So you know your oscillator looks like this now. Okay, that's what, okay, this is your oscillator in there. If you want, I can add it if you need the eye candy. There it is. Okay. Okay. And when this one closes, if it closes with no higher high but a lower low, then this will actually be into this zone. I'm already reading into it. Okay, like this. Okay. So you can see based on the 1 hour chart, the market, right? In this case, these are pivot points of price. It's already bearish because the lower low produces a lower high, right? Then you look, if you're doing price action, you look at support, support, resistance, resistance, okay, and all that kind of stuff. So now you got price action, you got price pivot points, and then you got market. So this is market resistance, this is price resistance, okay, and then one extra piece is it's doing y equals mx plus b, okay, for the intercept and the slope, right? M is the slope. So part of the calculation here is rise over run, and that produces this downward channel, okay? So it's just an algorithm. It doesn't tell you anything except there seems to be a slope in your data set. That's how you have to look at it. You're like, it's not telling you anything except you're measuring a data set, and in that data set, there's an average and there's a slope to the average. And then it looks at how far price deviates from the mean. That's it. So it's helpful. It's cool. You're like, okay, right now we're about 70% overbought based on the data set. Typically, we don't hang out this far from the mean. Often it reverts, not always, of course. But if it does go beyond, right? Like if it does something like this next, and we're way up here, then your slope will be changing, and that'll be useful information. Okay? Now, none of this should make you bullish or bearish. What should make you bullish, let's say, is the Fed is pumping money directly into the real economy. Not only does that spur risk appetite, but it also weakens the dollar just in general. Okay, but that dollar has to also go abroad. So you could say all of this, you want pound dollar to go up, not because of anything else, but because of this with the central bank's actions. That's what I'd rather you do. Peter, go to youtube.com/fxbootcamp. There's a free video, a free training course there. I think it's 4 videos, 20, 30 minutes each. And it'll give you a detailed breakdown on how to use the stochastic oscillator as well as the MACD, which are 2 different things. So you would go to http, oops, got caps on. Okay? Blessings to you, Richard. All right. So that's how I'd rather you make your decisions. Okay? And you'll say, well, Wayne, this doesn't look bullish. Well, what does that tell you to do? You're like, Wayne, I'm bullish because of the Fed. Okay, cool. Right on. So what does this tell you? Don't be bullish now. Not on this pair. Not on this time frame. Okay? Okay? But you should also know on the higher time frame, this was your probably best trade of the week. It's at exactly the right place and at the right price. So if you're a bull after all of that, well, you say, well, the Fed didn't enact that policy yet. Okay, fine. So now what you need to do is prepare to buy some sort of dip if you're a bull. Okay? Then you say, well, that's all well and dandy, but I don't like the British pound. Okay, so you move on. The opposite and equal reaction is you think the dollar's going to get strong, you think the pound's going to get weak, you believe like there's a lot of civil unrest in the United States right now, and we face more COVID risk. So if you're a risk-off bear, this is the best setup you have for the week. You're on it like right now. And again, you should have known this on Thursday or Friday of last week. So none of this is like shocking, deep, detail here. And you should be zoomed in a hardcore on these candles, which you, by the way, down here expected to see. So now you're seeing it. And so now on maybe a different time frame, like a lower time frame, you're looking for something like this. Lower low, lower high, and lower low, and which you would be selling. And this would create a wick here on the next 4-hour candle. So you're actually setting up the next 4-hour candle. So you should be doing that maybe here on a 15-minute chart. And you would look for something like down, 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 up, up, and you would sell here, and you'd get this down, down, down. Okay? So lovely. And then someone will say, is that a head and shoulders? Is that a head and shoulders? By the time you see the head and shoulders, people have already made their money, bro. Yeah. It's funny because all those things are taught because they're like, look, if you only trade these patterns. But the thing is, you should have been able to anticipate the pattern forming before they even formed. Right? That's the better part. Because things like a head and shoulders pattern or a crown pattern or whatever your favorite reversal pattern is, it only lives at support and resistance. And you might say, well, Wayne, support and resistance is all over the place. No. That's not true. That's not true. Okay? You should have the ability, or maybe I'll say it differently. You will have the ability to know, right, where a bear would sell. Okay? That's the true resistance. Yeah, looking left is, but it's almost better than that. It's looking right as well as left. You should know in the future where a bear would sell. Even if you're a bull, you should know where the bears are going to sell. Or if you are a bear, you should know where the other bears are going to sell. And set up trades that way. Versus every support resistance is the same, and that is not true. Okay? So like on this chart, I think bears will sell here or a bear will sell up here. And I don't think there is anything else. How? This is what we do, Peter. Okay? Technical, fundamental analysis and knowing how to trade. See, you have to understand all of this is a self-fulfilling prophecy. So traders do what they do because they know other traders are going to do it too. So I'm just trying to teach you so that you know what everyone else is going to do, because everyone else is doing what they do because they believe everyone else is going to do it too. Okay? So like, that's what a bear is thinking right this second. Now, maybe market conditions don't produce the proper entry. Maybe there's not enough bears. Maybe we lose volume because of summer. Maybe people are scared about the testimony in the next couple of afternoons or stuff like that. Like, we don't know what people are going to do. However, okay? However, you should understand what they want to do. Stochastic overlapping. See, I don't care, Lucas. Okay? Right? Stochastic overlapping sell. No, 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 no. But I bet you've been taught something like that, Lucas. Okay? So it's not your fault. The world's a little more complicated than sell that because of the Stokes. So what I'm asking you to do is on Sunday, okay, listen to this. On Sunday, if you were a bear, you would have identified this as one of the major key levels of selling when we were way down here. And you would have said, if it goes up there, I'm going to look for consolidation, and then I'm going to look for an opportunity to sell. It has nothing to do with the stupid stochastics. Okay? If you can't do this, nothing else matters. Anyone can see. Trust I seek. Okay? Anyways, so that's that. Okay? Right off the bat, that is that. A bear would sell, and they've been waiting for days to sell that. You have to know that first and foremost. No one gives a dang about the Stokes. Okay? Stokes comes in later when you pull the trigger, but if you don't know that, then it ain't going to happen. All right, so now we're in our sell zone. If this only matters to a bear, by the way. You've heard me sing that song so many times. Anyways. All right. Boom. Okay. So this, if to know what to do beyond everything else, you have to know what I'm talking about here. Okay? Okay? You understand? Like, this is what you're looking at here is you have to see this as the primary sell opportunity we have in the next 24 hours for a bear. If there are bears, they will sell here. Everything else is irrelevant. Okay? Oh, but my CCI index is over, blah, blah, blah. Wah, wah, wah. Yeah. Yeah, the guitar's out of tune and broken. Right? But every dude and gal from the 90s knows that song for sure, huh? All right. So, we got all of this established now. I don't care about the Stokes. I don't care about anything, blah, 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 blah. This is where a bear is going to sell, or they're not going to sell, but that's a bearish trade plan. So now you go into a smaller time frame because we're there. Okay? We have a double top on the exact zone that you expected on Sunday. Or even Friday, you would have expected all of this. Okay? And that's the moneymaker part. If you don't know that, then nothing else is going to save you. You need to figure out how to know that. On Friday at close, you're like, oh yeah, it's going to come up, tickle 27, drop like a rock. Cool. Okay? Cool. So that's what you knew Friday or Sunday. Cool. So now that you're there, now you're looking for like a reversal pattern, right? Because you need confirmation that the bears are going to sell. So it's up, 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 drops right off your price, double tops, market open, great. So you're either in love with this or you're a bull. All right, let me say it differently. You're either in love with this or you're not a bear. Right? So with those 3 or 4 steps, you'll definitely, I don't know, let's say $1 million a year. But you have to follow those 3 steps like religiously, without fail, 1,000% of the time. And you do them in order, and you never not do them, and you always do them, and you'll always get that output. Okay? So that's that. Don't tell anybody though. Okay, don't tell anybody, and I'm never going to repeat it again. That's my secret sauce. That's what's going to put my great grandchildren through Harvard. Okay. All right, cool. All right, so the next step. Oops, I thought I picked a color. I did pick a different color. The next step would be Pachow. Okay. Okay. Thank you, Grumpy. Always good to see you smile, or smirk at least. Grumpy cats can't smile, but they can smirk. Yeah, it's a joke, guys. YouTube told me that there was a glitch in the matrix there. Right? Right? You have to work harder than everybody else. You have to be smarter than everybody else. And it doesn't hurt to be attractive. Those are the 3 facts of life. Okay? So you have to, if you're a bear, that's how you're looking at it, and you're either going to do it or you're not going to do it. And the results will be indicative of whether bears do it. So we don't know in the summer where bears are going to do this. Okay? So you've already got your 3A2 Fibonacci retracement. Okay? And let's say the aggressive bears, it's not really aggressive because aggressive bears would have taken the first shot. But like, that's that. That might be the rest of the day. That might be the rest of the week. Bear doesn't care. They're moving their stops. Okay. Okay. Jim, there's only, right? There's only two types of people in the world: those that understand Venn diagrams and those who don't. Okay, we're hesitating at 60%, 68% oversold. It's right here. Well, front running is fairly easy, men in action. So typically before you front run, you're already done your weekly swings. So you're already done, you already made your money, and you're sitting there like on a Thursday afternoon or a Friday morning. And on a Thursday afternoon or Friday morning, you have to understand you're planning Monday. Once again, if it's Friday and you're planning out Friday, you don't get it. You're not even in the ballpark. Okay? So on a Thursday afternoon or a Friday, you're already planning Monday's trading sessions. And you say, oh, well, I'm essentially at Monday's price. Like, I want to sell there on Monday, but it's Friday morning. But you're like, well, based on my analysis of next week, this is actually a good price. It's not a good price of today or a good price this week. It's a good price next week. I just happen to be on that price. So you're like, well, I got nothing to better do. It's a Friday. I already got all my money stuffed in my bank. So you take a shot. And you're like, nah, this is Monday's trade. But you're doing it on a Thursday afternoon or a Friday morning. That's all it is. Okay? But you can't front run if you're looking backwards. like, which most people are, of course, right? And the thing that gets me is some people are like, this is a July 2014 support level. Like, wow, really? That is what you're doing. Support from 2014. That's what has got your attention. Like, you're not planning out Monday, obviously. Okay? People plan so far backwards that they forget to look forwards. I'm going to release it to MetaTraders. for free. Someday, when you're all alone and the world is cold, I will give these price pivots to you. 'Cause you're smelly, with your smile so worn and your teeth so green. Baby, you smell like Vaseline tonight. Okay, so you notice one standard deviation is held. Tim, you're asking good questions and stuff. I recommend you go to fxbootcamp.com. The link is in the description below. There's a coupon code to receive, 76% off, and go through all the courses. There's no good rule of thumb. You either know or you don't know. No, but pivot points are only part of the question, Grumpy. Okay? Yeah, just get on it, man. It's like 50 hours worth of stuff. It says 35, but I think it's closer to 50. And then we have stuff coming up very, very, very soon. So the process will be you'll watch videos, and then once you think you got it, an education, then there'll be another step available for you that will truly give you an education. Okay? We got something coming down the pipe that will 100% prove to you intellectually and emotionally that you can become a successful Forex trader. And by successful, I mean profitable. And probably love what you do and all that kind of stuff. Or you realize you don't have what it takes and you will quit. And the good thing about that is you can go get your real estate license or something. But it will tell you, like, you think you want to be a Forex trader. Here's everything that's required. Here's everything. Here's the work. It's literally us holding your hand. Not literally, figuratively us holding your hand, taking you through the process of everything you want to do. But if you're a stubborn mule and you don't drink the water, you should probably quit. And we will save you years of your life. So you're right. So instead of wasting your time on Forex, you can go get a real estate license and say, isn't this closet space to die for? Oh, I just love morning light, don't you? And you can become a success there, or whatever you need. Okay? So I'm very excited about stuff like that where we will prove to you. I'm roasting now, of course I am. I will be able to prove to you that you absolutely 1,000% can be a success at Forex, and we will show you in a process of training you and educating you, and that you will see the results as it's happening, or you'll find out like you can do it, but you don't do it, and therefore you should probably quit. Okay? You know what, men in action? I don't think that's no, I wouldn't go that far. You either do it or you don't do it. Okay? I don't think it's mental or skill. I think it's probably 90% work ethic, honestly. So for those that want to get rich quick, I'll show you. You can be a success at Forex. It's going to be a lot of work and it's going to take time, but you absolutely 100% can do it. And you will know you can do it. You will believe you can do it. But then if you still don't do it after all of that, then this is probably not for you. Okay? You're not that type of person. You have a different personality. Okay? You're probably, right? But the cool thing is I'll save years of your life, right? And by the way, if you can't be a success at Forex, you can't be a success at any type of trading at all. Like, you will have to walk away from the financial markets, like trading oil or trading stocks or trading options. Dude, you don't have the work ethic, it ain't going to happen. So you need more like daylight type jobs. You want to sell cars. Right? You want to be outside. It's cool, man. Don't worry about it. No, but seriously, like, not everyone, whatever. I don't know. I don't know you. I don't know how you were raised. I don't know what your story is. I don't know what your personality's like. I know you can, so anyways, we have something coming down the pipe very soon. You'll be able to go through a process. And let's say you're like, you think you can be a trader and you're pretty sure you can. This will be something for you that will really test you, like a true boot camp, right? Like true run the obstacle course until you puke your guts out. But you come across the finishing line and you're like, son of a bitch, I knew it. I can do this. I'm a killer. I'm a hunter. I'm a killer. And you will come out strong. You understand that? And that is also a benefit, isn't it? Because it'll change your trajectory from like messing around with Forex being a success one day to like you are now ready and we will take you to the next step after that. And that's taking you onto the professional level. But if you don't know you can do it, if you don't 100% believe it, if you've never been tested or proven, then you'll always have some sort of weakness in there because you won't 100% believe it. Or you might 100% believe it, but you have no focused energy. Remember yesterday's conversation? Oh, I can be a success in Forex because I'm good enough, I'm smart enough, and my mommy loves me, right? You have no focused energy, it ain't going to happen, brother. I'm so sorry. You should try lifeguarding. You should be a lifeguard. You sit in a chair in the sun. Right? So, yeah, but if you got the focused energy, oh my God. Okay? Oh my God. The successful people I know, especially in the world of trading, which is different than finance and different than everything else, they got ridiculous sickening work ethic, as I call it, right? It's those guys. It's if you're that unstoppable force, oh, this is going to be good for you because you can't walk away ever. That's right. So I'm like, it's not an issue of a 5-year track record. You're going to be doing this for 35 or 40 years, and it never gets easy. You can never lean back or lay back. You can never throttle back. Okay? But so therefore you better love what you do. Okay? Yeah, well that's what's required, Tim. Okay? Yeah, no, what you guys will find is learning the ropes is not that difficult. Okay? Like setting this up is just another boring trade. There's 1,000 million of them. It's not a problem. Understanding technical analysis is not complicated. Understanding fundamentals for some that have never done like economics or finance before, it can be, but it's teachable. I mean, come on. Anyone that's learned economics is just taking a class and now they know economics. Like, I can teach you economics, right? I mean, I have a degree in macroeconomics. I can teach you. Not a problem. So I can take care of that too. Okay? what will hold you back is you simply won't do the work. Of course, if you have less than half a brain, I can't teach you. You're uncoachable. So literally, you have to have the ability to absorb information. Now, it might take you a week, it might take you 5 years to learn, but whatever it is, you have to have some capacity to absorb the information. But you don't have to be a genius, and far from it. So if you have half a brain, you're going to be fine. But you have to have the ridiculous, sickening work ethic. If you don't have that, it ain't going to happen. I don't care if you're a genius, you're going to fail. Okay? You'll be so smart as a genius, you'll be able to justify all the reasons why you failed. But it still makes you a loser. Oh, it's my broker. Oh, it's this other thing. Oh, it's the market. Oh, I knew no one could actually trade Forex. I knew it was a get-rich-quick scheme. Oh, I knew all this. Great. Good. Take a genius. Get the heck out of my office, right? But now, if you put the other things together, like, I think it's what holds people back is they just don't do it. No matter if you're pulling or pushing or carrot or stick, right? Right? But you can do this. Who's criticizing Mr. Connor? Is it like family and friends? Mostly it's, most people, it's pretty amazing. Even the professional money managers that I know, and I know quite a few, they don't understand what they do. So, I mean, to the vast majority of people, whether it's your friends or your family, they're probably right. 99% of the time, they're right. Like the people in the finance industry, they don't get it. So if you're a wealth manager, you're not an economist. You don't understand macroeconomics, right? Like I said yesterday, they don't even know where India is. Okay? So they're not going to be able to make good investments there. What wealth managers are at these big firms, big names you know on Wall Street, they're salespeople. They go out, they pound the phone, they bring your money in, and then they sell you a product inside the company. So there's literally people inside the company that say, oh, you need a 70-30 portfolio? This is it. And so the salesperson's like, okay, sign the contract, great, money goes over there, and they just sold you a product. Get on the phone, get another client. And they get paid by how much money they bring in, not how much money you make as an investor. Because you're not an investor, they just park your money into something else. So, like, for the vast majority of people in the market, they're probably right. Like, it is gambling. People don't know. So now you're at a different level. No one has seen somebody like you before. Okay, Mr. Connor? Like, you're an aberration. Like, you're the anomaly. Okay? And so this is why it helps to explain what you do through fundamental analysis. You could say, well, you know what? If you've never seen what I do before, it probably seems a lot like what you've seen in movies, right? You've probably seen these, Wall Street assholes on the phone brokering trades and throwing big money down and making $1 billion in a day and all that kind of stuff. That's not actually how it truly works, okay? You can say, for every one person that goes all in and makes $1 billion in a day, there's 1,000 dead bodies of people that went all in and lost everything. So you say, that's not what I do. So let me explain what I do. You say everything has to do with macroeconomics, which means business activity around the world. And because I deal with foreign exchange, the foreign exchange of currency, well, it comes from one business doing with a company doing business with another company in another country. And they exchange goods and services and cash. Okay? Goods and services one way, cash the other way. And they cross borders. And this changes value depending on things like supply and demand, what we call like universal truth, right? Supply and demand will push things up. So I have to anticipate these long-term trends of global business, right? This is normal stuff. It's banking, right? Bankers doing banking business. This is miners mining gold and selling it. This is Nike making shoes in Vietnam and selling the shoes in the United States and around the world. And all this business activity requires money moving here and money moving there. And I have to look at the macroeconomic trends. And that's what I do. So when money is moving from China to Australia because China needs iron ore and coal, and those are the two biggest exports out of Australia, right? Then I follow that trade. When China is demanding more dollars, Australian dollars, that pushes up the value. And I can anticipate all of this through, actually crunching data and following the, trade data and invest following that flow of money. That's all I do. Macroeconomics. Okay. Well, when South Africa sells gold in dollars, that's cool, right? But that's the thing with South Africa. They sell their gold in dollars and then they pay their employees in rand. All right, so we're still farting around at 68%. Well, men in action, if it's crap, then maybe you should be selling gold, right? Right? Oh my God. So why don't you just lift some gold out of Ghana? Make sure you got good paperwork. Ooh. Well, I looked at actually lifting some gold out of Ghana a couple of years ago, and a friend of mine, he started a hedge fund and built it around physical gold, and would actually, so he's Canadian, and he'd zip down to Ghana and literally follow it like it came out of the ground here, and then you have to get it melted and assayed and hallmarked, and at any given time there could be a switcheroo. Like you have solid gold and now you have a golden piece of lead or something, right? Like you got to follow it all the way, and pretty soon you got yourself some dory bars, and and now you got to lift it out of Ghana. So literally, you have armed guards, multiple SUVs. You're out to the airport. You got your private plane, and all of a sudden the police come over and they're like, "Well, there's a problem with your exporting paperwork. We might be here an hour, we could be here a week. Or you can pay $25,000 in cash right now in a bag." Okay, $25,000 in a bag. Good. You may leave Ghana, right? And off you go. And, I might do it once, but, because it sounds cool, like rolling through town with black SUVs everywhere and ex-military guys carrying machine guns, all to protect you, right? But I don't like it because it's such bad karma. You walk in and everything is a scam, right? You meet this guy, he wants to sell you $10 million in gold. He's like, I'll meet you at the cafe. You get to the cafe and it's a dump, right? It's nothing. Like, and then he gets there and he doesn't have enough cash to pay for his taxi. Hey, can you pay for my taxi? Like, dude, you're here to sell me $10 million worth of gold? Like, I can't believe I've been talking to you for 3 weeks about this deal, and you don't have enough money to pay for your taxi? You're like, oh, son of a bitch. Really? You've been scamming me this whole time? Oh my God, seriously? And you're like, I gotta go. Enjoy the coffee. Right? And like, you gotta deal with that up the yin yang. So you're like, I don't have time for that. But I'd probably do it just for fun. Ooh, I love Turkish coffee, except no sugar. I always say that too. No sugar. What do you mean no sugar? I don't want sugar in my Turkish coffee. You have sugar. I don't want sugar. No sugar. Just coffee. You have to have sugar. No, you don't have to put the sugar in the coffee. I just want the coffee. Anyways. But. So anyways, yeah. All right, so now what we're watching, let's move in and really pay attention to the price action. Top, right? Lower high, lower low, lower high, lower low, right? Lower high, lower low. And we're having some struggles in here. Okay? And it's right off the 618, or the 68. Okay? Right? This is one standard deviation below the mean, and there's a slight downtrend, as you can see. That's why we're sellers. So it needs to set up. So let me adjust here. So this is the old trade, which we got beautifully. Let's set up the new trade, and I don't even want that. So this is supposed to hold, and the original target still is there. Okay, a 618 predicts a 1382. Sorry, the 382 predicts a 1618, and that's what we have here at basically 26. So this is supposed to produce at least one more move down, but the psych level's in play, right? Yeah, I was watching them earlier this morning, men in action. Not Euro Kiwi. I was watching. Which one? Yeah, Euro Czar is actually beautiful. Yeah. Sure, KG. Yeah, that's basically what it is, KG. Right on, Riyadh. I was up late. I made very unhealthy choices yesterday, so I look bad. I feel bad. I have a doctor's appointment too, so I have to go in. Actually, I got to leave pretty soon. Um, so I look pretty rough. I feel pretty rough. But thank you. Okay, ask the other question, KJ. I gotta go. I forgot. I have a doctor's appointment. They're worried that I might not be diabetic anymore. They might not want me to be on insulin anymore. I'm like, dude, just refill my stupid prescription. It sucks how doctors have to get involved. Look, I've been diabetic most of my life. I still need insulin. Renew my prescription. Oh, well, you're going to have to come into the office. Why? Why? They're like, oh my God, you're not diabetic anymore. Okay. Okay, then what is that when your support turns into resistance? Yes. So that's it. Role reversals or support becomes resistance. Okay? And that's essentially what we're watching here, right? That's what happened here. So let me get rid of the Fibonacci. Okay? Crypto, because I'm a small business owner, I've paid as much as $2,000 a month. See, in America, they hate small businesses. They're like, oh, well, if only you worked for a big company, the insulin would be $2. But because you don't work for a big company and your insurance is going to be thousands and thousands of dollars a month, and then when you show up to get the insulin you need, instead of $2, it's going to be $1,000. I'm like, oh, well, that sounds really cool. But if you work for a big company, your insurance would be cheap and you'd pay $2 for your insulin. But you don't work for a big company, so you're screwed. It's horrible. It's horrible. It's horrible. So anyways, I got to go. We're stuck on this standard deviation all this time. Maybe it's important, maybe it's not. You need to decide. Also, right? Also, you have to understand where the bulls are going to buy if you're a bull. And there's definitely bulls here, right? I mean, the longer term trend is up. So we're farting around on a 382 central pivot. Now, the central pivot's a little lower, right? It's a little lower. So that's why I thought we'd come down here first and then go up. Okay, that bulls would buy it a little lower, but we don't know that to be true yet. Okay. But I hope you appreciate that we put this together and watched it all the way through on the 5-minute chart. Okay. Oh, I don't know anything about that, Highlander. Okay, so anyways, peace on earth. May the pips be with you. May our profits be above average. I'm sorry I got to go. I got to make that doctor's appointment. Otherwise, I won't get insulin. Please give me insulin. Not until you pay your copay. I'm like, dude, take the $20. Here's $50. Just renew my insulin. Yeah. No, I fight with the doctors. I'm like, I fight with everybody. It's so stupid. What a stupid industry. Hey, you have an appointment? Good. Sit your ass down in that chair for 45 minutes and wait. I'm like, dude, I make twice as much money as you do. Why don't you sit your ass down and wait for me? I might be in at 10:30. I might be in at 11:15. I really don't know. Oh, well, I have a doctor's degree. So anyways, no, that's true. This is who I am, right? I get all grumpy and mad. Oh, yeah? You went to Harvard Medical School, huh? Where is Eastern West Virginia? Yeah, so anyways. Yeah. So that's me. I'm an entrepreneur. There should always be a better way. So anyways, peace on earth.